It's interesting, 10 years ago, trying to get people to invest into food and food systems was near impossible. The returns were low, 2 to 3%. Of course, everyone back then was, looking at their mining stock returns. But there seems to have been a lens put on it, as you've mentioned, over the last, since COVID especially, around, and there's some buzzwords here, right? Sovereignty and food security and national security. But it's not until, and we've spoken about this in the past, it's not until people can't get either their finished product on the shelves or their cauliflowers or whatever in the green grocery aisle that they realise that there's a challenge. And I think that the advent of obviously food technology is over the last 10 years, especially in Australia, has made food and food systems very attractive to invest in. And there seems to also be a bit of that nationalistic pride driving that too. I'd love to get your thoughts there.
I think we should be very proud of the food system that we have in Australia. The SARO study a few years ago came out with a measure that Australia's food system feeds over 75 million mouths. We are inherently an export nation for our primary industries. We are well regarded for being clean, green, sustainable, and most importantly, of quality. And as someone who gets the privilege of facing this every day in the supermarket when there is without the constraints in the supply chain, I think we sometimes forget to appreciate how magical our food system is. And so the question then is, how do we make it more how do we increase productivity? How do we support the full supply chain? How do we make sure that there remains a high degree of profitability so that we have an ongoing sustainable food system around us? One thing that Mark and I constantly discuss is I think everyone understands that food is important because we all need to eat, but getting the private sector to part ways with their own capital to invest in the ecosystem has been very challenging. We've been, across not only Australia, but globally, food ecosystems have been predominantly supported by policy level or through development banks and financiers. It is very challenging to put an investment opportunity in our food system next to some of these more attractive financial returning and dividend paying assets and investment opportunities. And it's been a real challenge. For us, we know that we can deploy so much more capital into the future of our food systems. But it's been very, very challenging to convince not just the everyday investor in the high net worths, but through to the institutional investors on why this is a strategic investment opportunity which they must allocate into. And so it's something that we advocate for every day. And it feels like the investor conversations that we have, not only just in Australia, but globally, most of the work is actually in education around why this is such an amazing opportunity, let alone the obligations to society.
And talking about other companies that you guys have backed, and in this exact frame as well around protein, food security, Harvest Bee, it's a plant protein, and the category has a credibility problem over time. Beyond Meat's share price tells that story, but Harvest Bee isn't playing the same game, is it? Mark, maybe you could tell me, or Tim, because you've got a lot more to do with the company, I guess, but maybe you could tell me what they're actually doing differently and why that matters.
Yeah, so Harvest Bee, our investment thesis behind the company really started around what is the market acceptance for future protein systems? And looking at it not just around plant-based proteins or any of the climate imperatives, it's about what is the number one inhibitor for us to diversify protein options for the consumer and for the market. And ultimately, what that led to is two driving factors. Firstly is texture. And texture's been one aspect which I think every future protein solution has been trying to work on. And what we believed was Harvest Bee's texture is the market leading solution and option and market. Secondly is what is in the food. which really comes back to the provocation that opens this whole discussion today. We having a clean label where Harvest Bee has somewhere around a dozen ingredients, rather than if you look at the back of a label of some of the other alternative protein um, solutions in market, is a clean label was really critical to so that we can ensure that we provide a high degree of nutrition without putting all of the additional additives into it to make it feel and taste like an animal protein solution. And so for us, advancing the food system is very much around finding not only just the great products in market, but the innovators who've been able to pivot and find that product market fit. And so for Harvest Bee, it's an exceptional team. And they've gone through a range of various formats, integrations, applications, and integration trials with a range of customers to really try to find how do we materially advance the protein ecosystem that we have available to us. And then secondly to that is how do we do that in a sustainable manner, predominantly on the basis that we need to feed a growing population, and the current food system is not going to be able to achieve that in itself.
And Harvest Bee is complementary. It's not a replacement. So, Mark, why did this look investable, when the category narrative seemed to be collapsing?
Yeah, it's a very good question. One of the things we really liked about Harvest Bee wasn't necessarily just the fact that they're producing an amazing texturized protein that essentially can replicate the mouthfeel and the palate feel of traditional based animal proteins, but they're also not of the opinion that it's either animal or plant, which a lot of, I think, the other alternative protein that have come to market have divided the market on. Harvest Bee's focus is very much around increasing the protein availability across the whole of the food system. Now, that includes animal and plant, but what they're doing that's very, very interesting is they're actually blending their texturized plant-based proteins with animal proteins. And so if you think about a sous vide, or think about aged care, defense, how you might actually cook at a commercial scale, blending the Harvest Bee proteins in with animal proteins at the same time does a number of things. It reduces the actual cost of the protein consumption for the user by, I think Tim can correct me, by 25 or 30%. It increases the fiber content, and it actually increases the protein content as well. So when you actually blend together both animal and plant-based proteins, you're getting a much more nutritious food system at a cheaper cost that's more accessible to all. And so where you see a lot of the other plant-based protein companies saying meat is bad, Harvest Bee's thesis is very much around, well, let's increase the availability of the protein stack across the whole of the food system that's going to benefit consumers around the board. And that includes things like aged care, defense, school meals, and others. And so that's something that's uniquely different about the strategic positioning of Harvest Bee versus some of the other plant-based protein companies.
And as you mentioned earlier too, drawing that line from Hanoi down to Jakarta, there's how many people, mate?
It's 700 million
700
people that
million.
represent the fastest growing middle class on the planet.
700 million. So places like Indonesia, where their president has brought in programs trying to feed school children at least once a day, something like Harvest Bee would be a game changer.
Yes, absolutely. And the technology that's come through Harvest Bee that allows for these sorts of food product to be produced, and also transferable because they can come dehydrated, which means you don't need cold chain. That's incredibly important across regions like Indonesia, where you've got challenges with infrastructure and hub and spoke models. So yeah, Harvest Bee's solution is incredibly important in that it can be transported. It's light. It can be blended with animal proteins, or it can be used by itself. And that Indonesian example of the getting every child one meal a day is a perfect example of why these companies are incredibly important.
So, gents, I guess overall, what does the operational reality of scaling a food manufacturing business in Australia actually look like today?
That's a really good question. We are working with a company at the moment that we've recently invested in, which is actually in the fiber space, Todd, and a new type of fiber that essentially would be used to replace inulin, but also to increase and benefit things like gut biome. Um, Inulin is one of the fibers currently used in the baking industry and also in the cereals and muesli bar industry as a fiber component. There are better alternatives available now with companies like Health Food Symmetry that create their fiber product being trialled now by a number of food ingredients companies. Now, to work with them and to get them into our food systems, as Tim had mentioned earlier, does take time. It takes about 12 to 15, 16 months to actually do the trialing and testing, and that's got to be with then large manufacturers of food products. You can name any of them, that produce breakfast cereals, muesli bars, and others. So getting those trials in there takes time and requires a champion on both sides, both within the startup company, but also within the food ingredients company. And then once that's done, making sure that the recipes fit, that they can scale efficiently, they can produce enough product and material for large national and international markets. And then most importantly, the unit metrics make sense. So that's the cost of the product that it might be replacing. And so these are also the sorts of challenges and opportunities that we work closely with the companies that we invest in to solve, and also then creating those institutional relationships and contacts for those companies to actually start to do pilot scale production that will then lead to large commercial scale opportunities.
Conventional wisdom, says that, traditional foods have had their moment and the market's moved on, but Harvest Bee, Full Foods, Embryo, and the other companies you've mentioned, they make the case that conventional wisdom's wrong. Mark, do you see the capital? You see the capital cases for these three companies, and Tim, you see the operational reality. Can you walk me through the last time you landed in genuinely different places on something and what resolved it?
I think Tim and I probably have spent the last, we've been working together for over a decade, and certainly spent the last 6 years deeply embedded within the food system. So our views and the thesis that we've built around Mandalay are very much united in where we see the opportunities. I think one of the areas that has been challenging because of the lack of knowledge is that investing in the ag and the food category actually can provide significant investor returns and higher returns than a lot of the traditional venture categories, which might be like B2B SaaS. So when we invest in a company, we work with them closely. We support them through other follow-on investments. We introduce a lot of other capital and institutional investors and strategics coming in, is that we can fast track them to an exit opportunity. Now, an exit opportunity from a venture perspective is where there's either a secondary market or a trade sale that allows for that original principal to be returned to the investors with the profit as well. We know, having invested now in the category for close to a decade, that when managed properly, that this category does provide top quartile return. So, very, very top level returns in comparison to a lot of the traditional venture industry verticals as well. But there are very few that have the detailed domain expertise to work with and diligence companies like the ones we invest in, because it takes a very, very broad knowledge of food systems, everything from on-farm animal genetics right through to restaurant SaaS. And so it does take a very broad knowledge and understanding of the system and the ecosystem that we operate within. And the other thing on top of that, Todd, is that across the systems that we work with and the companies we invest in, we know that mid-market exits, that's $200 to $600 million exits, are roughly where we land with food companies, food ingredients, and agricultural companies. So we're not necessarily unicorn hunting in that. And what that means is not looking for that one company that's going to do 100x and that returns everything for a fund. It's amortizing and averaging that across a portfolio where we know there are active mid-market exits to provide top quartile returns for our own investors, but also allows us to grow the companies to a scale where we know there's an opportunity for founders, investors, and strategics to come in and helps grow and scale beyond a certain point in time.
So Tim, Mark's just given me the PR version, mate. Give me some reality when you two disagreed on something and how you solved it. Was it paper, rock, scissors? Was it a bit of a punch on in Kelvin Grove? What went on?
I think I get a fair share of stink eye from Mark when I talk about opportunities that cross our desk. And I think the most critical thing is not to come with our own preconceived assumptions of where the industry is at or not. And that, for us, discipline is not just about taking our time and being considerate about our investments, but really, I think what unites Mark and myself is we both come from a engineering or scientific background. And that first principle approach is how we look at our investments, even though we act in a more, non-scientific environment sometimes, and particularly an investment where it is non-linear. But what I do want to highlight is Mark and I are not two gentlemen who are farmers by background. And so for us to come into ag and food and talk about what is the future and where the innovation is something which is not fitting, to be frank. And so how do we solve this as an industry or a thematically focused fund manager? Is to really lean on our networks and industry partners to give us the feedback and insight to what is the actual needs and demands in market. And trust me, Mark and I have walked into hearing a first-time pitch and walking away with our own assumptions of what the challenges are in the commercialization journey ahead, and only to be proven wrong consistently by the company and the founder more than between Mark and myself, between each other. That said, one thing that Mark and I constantly debate is around timing. I think we see, with no doubt, we see a volume of amazing innovation products, and then you sprinkle on top some very enthusiastic founders, and it looks like a very sexy job. But the reality is, whilst there might be some great products and innovations in market, our fund is determined by not only just returns in absolute values, but also timing. And funds a benchmark on an internal rate of return, which is a function of time and the absolute number of cash return. And so we are on the clock. And as much as we want to back everything, which is the best future of ag and food, the reality is we need to also get the timing right. And that's probably what really challenges Mark and I around our internal debating is, what do we foresee the forward timing being on the commercialization and adoption? What is the timing in getting the company ready or having the metrics for an acquisition or exit or IPO? And what is the timing for the broader market to have an appetite to acquire these companies? And so timing has been a real debate between us. And the example I'll give you is the company Mark just discussed, which is Health Food Symmetry, a advanced prebiotic fiber solution or ingredient, which is derived from virgin sugarcane. So basically out of sugarcane, they removed the sugar, which is completely opposite to what you would generally think. But by removing the sugar and keeping the fiber intact, it lasts through the gut for longer, which means it's better for you. Now, the question we had to ask ourselves is, yes, this is a great product. Yes, there is a lot of clinical trials. Yes, you can put a claim on label, but is the time now? And what that ultimately led to is a belief that we have gone through the protein wave as a macro, and that the next one is going to be fiber as a key macronutrient in markets. So that's timing piece. And then the second piece is the industry piece. And what really, the way that we looked at it was we thought very much through the lens of innovation is about what is the nutritional claim? What is the IP position? What is the operational ability to executing scale? But actually the question that came from industry is, what is the functional benefit, fundamentally, what is the functional benefit to adopting and replacing my current fiber solution with this new innovative alternative? And functionality means, firstly, do I need to change my production line? Secondly, is what is the impact to my formulation or recipe? And what ultimately got us over the line with this investment is the understanding that by using this ingredient as a fiber, the phytobiome as the trade name, you're able to use less fiber whilst getting a more complete and a better for your gut or nutritionally fiber solution in your product. And so for them, one dosage is 1.5 grams. And so even if the per kilo or per gram cost of phytobiome is more than inulin, The reality is used less. And so we're still able to achieve a price parity whilst also being able, whilst also where the customer does not need to change their production line to adopt this alternative fiber solution.
Yeah, I might add, Todd, just on top of what Tim has said then, is that one of the reasons we don't really clash on investments is that we don't come with preconceived conception, but both Tim and I are very much data-driven. And where we're seeking to get validation on an opportunity that either one of us or both of us or the team have queries about, we lean into our venture partner network. Now, venture partners are groups within a venture fund that actually support deal flow, market validation, competitor analysis, and have been operators in the verticals that we invest in. So we have about 8 venture partners globally, including Australia, Singapore, Indonesia, the UK, France, Luxembourg, and there's a few others. And these are operators who have either founded or worked deep within food, agriculture, or downstream companies. We lean heavily into our venture partner network to support the endorsement of opportunities that we look to invest in, and they provide the data analytics and deep market knowledge and understanding. And the reason that's important is because we're not vets, we're not agronomists, we haven't necessarily run food ingredients companies, but we have people in our network that are our venture partners that have and can provide that deep domain expertise and analysis, which is underpinned by data that allows us to come to the assumptions and the strategic thesis on investment that we do come to. So it's not a sit around and debate, it's let's use data and the people we know around us as points of validation for the assessments we make as we're thinking about any investment.
And data's king, isn't it? It provides the insights, the optimization, and then eventually the experience. It should be used more more openly. Gents, I want to come back to a question at the end of this conversation. It's the one that sits underneath everything we've been talking about. But first, before we get to that, you're both in Brisbane in June for Global Ag Invest Australia, June 10 to 11. Mark, who should be in the room that isn't planning to be there, and what should they be asking that they're not asking now?
Yeah, so Global Ag Investing is actually an interesting event. It's only previously been held in New York, Tokyo, and London. It's the first time the event itself is being held in the Southern Hemisphere and in Brisbane, for that matter. The event itself was traditionally for a lot of natural capital providers, so those that are looking to invest across agricultural land and agricultural systems. But this year, and particularly the Brisbane event, there is a big focus on ag technology and technology adoption on farm to increase productivity. So the event itself traditionally tends to attract institutional investors. So the large corporates, large super funds, and others that invest in land assets, as well as high net worth individuals and those that actually work within the corporates in that space. This year, I think there's going to be much more of a focus on the technology companies that help drive and underpin food production and productivity. So if you're an investor or an angel, if you work within the food systems or the food manufacturing supply chains, or if you're associated with natural capital and investing across natural capital, that's the sort of audience that is going to be attracted to global ag investing. It's exciting to say that it is the first time it's been held in the Southern Hemisphere. And so I think there's a really interesting opportunity for Australia to put its hand up to say, we are world leaders in food innovation, agricultural production. And if you think, Todd, about the whole of the Australian geography, we actually represent almost every growing geography across the world. So we have tropical, we have cold climate temperate, we have subtropical, and we have intermediate agricultural zones. So whether you're comparing us to areas of North America, the southern parts of the US, Brazil, Argentina, the Middle East, and parts of Asia, the technologies that we actually produce in Australia have the relevance across all of those jurisdictions, and that's something that we need to become a lot more vocal about and a lot more supportive of across our own investment landscape.
I'll be there. Looking forward to seeing you guys there too. But the question I said I'd come back to earlier, who controls the technology that feeds the next billion people? And what does Australia have to do in the next 5 years to make sure the answer isn't not us? Mark, you first, then Tim.
So I think in Australia we have an incredible research and development base. We have very unique uh, systems and financial systems around our growing industry, having levies that might go to various levy groups like Horticulture Australia, or there are groups like Agriculture Victoria Services, and there are levy bodies across all of the major industry groups. Now, a percentage of the levies that come out of those levy bodies go back into research and development for innovation. Australia has some of the best R&D and innovation coming out of anywhere in the world when it comes to the horticultural and agricultural food systems that we work in. Where we fall over is the follow-on investment required to take that capital or to take those opportunities, capitalize them appropriately to grow into global markets. Where we don't do that, we lose them. And a concern that we have, both Tim and I have, is that if investment in the technology and the food systems and agricultural area is disincentivized, and that could be through anything from the increase in capital gains for investors right through to duties and taxes involved in land tax, we lose these opportunities to global markets. Australia itself is fairly fairly behind much of the rest of the world when it comes to financial innovation across our systems that support, food and agriculture. And so that's an area where we really need to lift our game is for our banks to become more innovative and more supportive of fast growing companies in the space. And that could be through everything from things like trade financing opportunities, credit lines not necessarily directly associated with securing land asset as principal, and others. So our innovation across our financial institutions needs to become much more aggressive and much more thoughtful so that we don't continue to lose opportunities to foreign markets.
Tim, I'm going to throw to you, but I'm going to give you a little bit more of a challenge. Sum it up in one sentence for me.
I like to think that Australians are an ecosystem and population of early adopters. And so my single line is everyone should take a little bit of a risk. Everyone should try something a bit different. And what that ultimately means is everyone as a customer has the power to really try these future solutions and get out of our day-to-day status quo and what we feel comfortable with. Because ultimately, innovation is a little bit uncomfortable, but it's the excitement of something a bit different, which will ultimately drive the future of our economy.
Mark Gustowski, Tim Hugh, Mandalay Venture Partners and Tundra. 3 companies, 8 bets. One question that matters more than most people know. Thank you both.
Thanks so much,
Todd.
Todd. Really appreciate it.
Mark Gustowski, Timothy Hugh, Mandalay Venture Partners and Tundra. 3 companies, 8 bets. One question that matters more than most people know. Thank you both. For Intelligence Optimised, I'm Todd Crowley. If this conversation shifted something for you, share it with someone who should hear it. And if you're heading to Global Ag Invest Australia in Brisbane in June, come and find us. These conversations are better in person.